Welcome back everybody to the Money Mindset channel. Today we're going to go over my portfolio and this will be week number 3. So I'm going to start off by the day, the week, and the month for how much I'm up by or how much I'm down by. So let's start with the day. We are up $6.72, which equals to 0.28%. On the week, it's $17.04, which equals to 0.72%. And then on the month so far, we're up $41.42. So as you can see, last week actually I had some prospect capital, which they didn't pay a dividend and I thought they did. So I got rid of it and then I added that money to Ford. That's why I have 38 shares of that now. Pfizer, PEGI, Coca Cola, CubeSmart, Iron Mountain, AT&T, which was a purchase last week, Conoco Phillips, oil company, Hanes brand, and Unilever. So today we're going to go over the new companies that I'm going to be buying. And as you can see at the top right here, for my buying power, I have $459.30 to spend. I'm going to probably spend about, honestly, as much as I can buy. So let's get into that right now. So one of the old stocks that I had on my portfolio from before I start transferring over to this new account was AGNC. So AGNC, as you can see right here, I'll just read a little bit about the description. Investment corporation operates as a real estate investment trust. So pretty much real estate investment trust, which is a REIT, and a REIT is real estate investment trust. Exactly. So that's a REIT. So it pretty much is just you own a bunch of real estate within this stock. So AGNC, as well, as you can see, they pay a nice dividend of $12.31, which is honestly amazing. So I'm going to go ahead. I'm going to go ahead and buy. I want to buy a lot of it, so hold on. 20, let's do 15. We're going to buy 15 shares of AGNC, which is the market price now at $16.47. And the estimated cost would be $247.04. So let's swipe up. Perfect. Now we got 15 shares of AGNC. Nice, sweet. Let's go back. I had this ETRACKS Monthly Pay 2x leverage close-end fund, which is really volatile, but look at that dividend, 16.57%. These are stocks that you don't want to be in for too long, but you know, you could hold on to them so you can get some of that dividend payout. So honestly, I'm going to be buying, let's just buy 4 right now, which gives you total of $55.84 and market price is $13.96 for each stock. So let's go ahead and swipe up. Buy that. Great. Let's go back. Now, this is one of the ones I want to buy actually, and it's also a REIT, which is real estate investment trust. It's called APLE Hospitality. So they own a bunch of Marriotts, I think some Sheratons. It's like the hotel business. So, you know, I don't see that going out anytime soon. The dividend yield is actually really, really good. 8.42%, which means for every $100, you get $8.42 all the year. And so it's priced at $16.33. Going to be buying some of this. And at the top, you can see we have $156.48 left. So let's see how much. Let's try to get 7 shares. Okay. Yeah, let's do 7 shares. Go ahead and buy that. Nice. Go back, and I want to actually add to my Ford position right now because it's been taking a hit. I did buy kind of at the low end, but as you can see, my total return is negative $3 and some change. It's going to fluctuate throughout the day, but I wanted to go ahead and buy some. So with the rest of my money, I'm going to be buying Ford stock. They pay usually around 15 cents a share each quarter. So I'm going to go ahead. Let's see how much we could buy. 4. Okay. 5. I can only buy 4. So I'm going to go ahead and buy 4 for the price of $34 and now 18 cents. Great. Now you can see my portfolio. Ford, Pfizer, PEGI, Coca Cola, CubeSmart, Iron Mountain, AT&T, Conoco Phillips, Haynes Brand, Unilever, AGNC, CEFL, which is the ETRACKS, and then APLE Real Estate. So that is my portfolio. Like I said before, we're at $2,390.28. I'm not really in it. I'm not really investing for capital gains. So the capital gains would be, let's go to Pfizer. The total return, that's capital gains. So as you can see, we're up $31.80, which is 5.78%, which is actually really nice, but I'm not invested into this company for the capital gains. That wouldn't be investing, that would be trading. So like if it goes up $30 and then I sell it and I haven't even owned it for a year, that's a flip. I've made $31, but now I don't get to have that dividend yield of 3.1% because I'm not invested in it anymore. My money's gone and I took the quick cash. So I'm in it for the long term. So all these companies that you see that I have, I'm going to be holding them from years on end. So this portfolio is going to be creating another source of income for me in the future. So I'm going to be adding to it every week for a long time. So, yep, that's it. I have the next 2 stocks I probably will be buying. I want to get into Disney. They just dropped this new streaming package that's honestly is competing with Netflix. So people have been talking a bunch about it. But honestly, the real reason why I want to buy Disney is because I have this young nephew and he's so obsessed with Disney. So I thought, there's obviously money there, and it's not gonna go away anytime soon. Like kids been loving Mickey Mouse, like and just Disneyland and Disney World, like they will always love that. So I'm just gonna buy a piece of it. And I heard that they pay semi-annually, which means they pay 2 times a year for their dividends. They have a nice dividend yield at 1.44%. Now you might not think that's a lot, but the cost of the stock is high. So I don't really know. 1.5, let's just round it up. 1.5% of $130 is it's around, I don't know, $2 to $3, I think. I'm just gonna do the math later on, but yeah. This one has been crashing down. Kraft Foods, they have a nice yield of 5.74%, and it's at a decent price right now. As you can see, over the week, month, 3 months, been down $3. On the year, it's been taking a tumble at $27 of a loss. So that's good news for me because I'm here to buy stuff for the cheap end, and I don't want to buy stuff really, really expensive. I can kind of play the waiting game, stack up some money, and then buy it when it's at its low end so I can get more shares, and more shares means more dividends, and more dividends mean more income. So, we're just trying to build this cash cow right here. So I hope you guys really love the video. I will be doing another one next week. Every single week, I'm going to do this Robinhood challenge, which is, you invest money every single week. It depends on how much you want to put in. I'm going to start off with $100 a week when I get back to my portfolio set amount. And I'm just going to keep updating you guys. And then in between those updates, I'm going to be dropping other videos explaining what stuff means in the stock market, explaining what a REIT is, explaining what, sectors are in the stock market, and how to buy stocks and stuff like that. So it's pretty simple. I'm just going to try to teach you guys what I know already. And yeah, so I hope you like and subscribe to the video. Please, please, please do that. It's super detrimental to me. So I can get that good algorithm going, and so that I could help more people and teach more people what I know. And yeah, so like I said before, like and comment and subscribe, and I'll see you guys next week. Thank you.